Mortgage Calculator. Today we're going to go through some live mortgage rates, and then we're going to talk about 4-unit property loans for a deep dive topic for today. We'll wait just a couple of minutes here to get started. We're going live on all the different platforms and giving everybody a chance to tune in as well. We put the chat up on the screen there, so you can see you drop a comment there as you tune in. We can see it up on the screen. Thank you for the comments already coming in there, tuning in nice and early. Appreciate it. We'll get started here in just a moment. Great topic here today, something that we do a lot of here at the Mortgage Calculator. So definitely going to be an interesting show here today. Very interested to see what the rates are looking like today as well, with all the activity going on. And it looks like we are live on all the different platforms, so we can go ahead and get it started. We'll take the chat off the screen for now, but keep dropping comments as you tune in, and feel free to drop any questions you have in the chat as well when we go through our deep dive topic here for today. But we will go ahead and get it started now. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender specializing in non-QM loans, and what we do every morning on this show, 11 a.m. Eastern time, is go through the live mortgage rates, see what the market is looking like, and then we do a deep dive into a different loan topic. Today's loan topic is going to be 4-unit properties, something that we do a lot of here at the Mortgage Calculator. We work with a lot of investors and do a lot of non-QM loans. So I'm sure Jose has some great examples of some cool things we can do with some 4-unit properties. But before we get into that, we'll do what we do every morning, which is pull up our pricing tool and see what the rates are looking like for a few different programs. So Nick, if you're ready, let's go ahead and pull up our pricer and see where the rates are at this morning.
All right, let me switch my screen and check it out. All right, this is our pricing tool for our team. This will show us the general rates and the APR. For today, it is November 16th, just after 11 a.m. So all of our programs are live now. If you'd like a full loan estimate with a breakdown of all the fees that go into the APR, please get with our team members. We have over 400 licensed loan officers in 24 states. For all our demos, we'll set up the same scenario so we can compare across the programs. 400,000 loan amount, 80% LTV, 20% down payment. And we'll look for the lowest rates for conventional, FHA, and our expanded guidelines, where we have over 5,000 additional programs. Many other banks or lenders do not have any. We also have VA and USDA. VA is only for eligible vets and active service members. If you are eligible, let us know. USDA is only for eligible properties. If you do happen to be looking at one, just let us know. We'll start with conforming conventional, purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt-to-income ratio of 40%. So let's see where the rates are this morning. All right, they've gone down a little bit, about 0.25 from yesterday. So 6.75 rate, 2.5 discount points and cost. What's the final APR? 6.967. So under 7 for the first time in many months. And yesterday it was at 7.2 something. So definitely some good downward momentum today. Hopefully that continues throughout the week. Now, if for any reason our customer doesn't qualify for conventional, the next option we want to compare using the exact same settings is FHA. FHA does allow more credit leniency for credit issues, as well as a much higher debt-to-income ratio, but we'll keep everything exactly the same so we can compare apples to apples across the program. Oops, there we go. Now it's exactly the same. So let's check out the FHA, and a little downward momentum here too. Hopefully we see some more as well. The top option here, 6% rate, 2.5 discount points and costs, puts the final APR 6.643. So great option here for our customer. that needs to use FHA, and it's actually cheaper for customers that qualify for both. So again, our customers that qualify for both, don't overlook FHA. This does include the upfront and yearly mortgage insurance, and you can tell here that's included in the APR. It's actually a touch cheaper than our conventional. And again, downward momentum is great. Now, where we love to specialize is if our customer, unfortunately, doesn't qualify for either program. Many other banks or lenders will have to deny that customer, but that's where we have over 5,000 additional options for the same scenario under expanded guidelines, where we can use alternative income. So everything else will stay exactly the same, but now we can choose a different income method. So full doc is what we use for conventional and FHA. That's 2 years of tax return. So we would typically choose this option because our customer doesn't qualify full doc to take advantage of another option. We have shows on all these different types as well. So we have asset-related programs, business bank statement programs. Our investor programs are just for investments, so that's not for this. Personal bank statement 12-month is what we use for the demo here. We have RSU, stated, VOE, 1099, P&L programs, no income CDFI programs, all kinds of options here. The 12-month bank statement is the most popular, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs and may just not quite qualify for the income they need for the house they want. We'll solve that problem. No tax returns involved at all, just 12 bank statements where we calculate the debt to income ratio of 40% in this example using just the cash in the bank statements, no tax returns at all. So many times our self-employed borrowers qualify for double or more of the income using this method. So let's check out the bank statement options this morning. All right, top option here, 7.5 rate, 2.625 discount points at cost. Final APR, 7.621. I believe that's about the same as it's been the last few days. Non-QM doesn't react as violently or aggressively, I guess I would say, as all the regular programs. So these stay pretty much the same here. So great options for our borrowers needing non-QM programs. And before we go into Jose's examples, we want to do investment properties. I'm sure Jose's going to go through some of these as well. But we love to work with investors. We'll set up the same exact scenario, and we'll compare our lowest rate options for investment properties under conventional programs. And then we'll check out our non-QM options. Remember, government programs like FHA, VA, USDA do not work for investments. We'll set the first example here as conforming. Everything's the same, but now we have investment as the occupancy. So let's see what adjustments the conventional has. All right, again, some downward momentum. That's awesome. 7.374 rate, 3.375 discount points at cost, puts the final APR 7.620. So again, we are taking it back to the basics the last couple weeks here as conventional rates have normalized, and you see we have some great options. We've always been keeping an eye on our portfolio option. It looks like it's down in about 7th or 8th place here now. This is the one. Again, same exact rate as it was yesterday, same exact rate as it was last week. These programs don't change as much. They were beating conventional by a hefty amount just a week ago. But today you see they're the same cost. So conventional is actually beating it today. But keep an eyeball on this portfolio option if you see the conventional rates get a little bit crazy or volatile. And final example here, investment property, same scenario. And this time we're going to choose our non-QM for investment properties. For non-QM, we must select our income. The most popular income by far and our most popular loan by far is our DSCR loan because it doesn't require any income or employment documentation from our borrower. Simply use the estimated rental income to calculate a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA, the mortgage expenses, then aka the property cash flows monthly, that's a ratio of 1 or higher. We have options for ratios under 1 where the property may not quite cash flow. And we'll use 1.5 as the highest value for our demo so we can see all the programs pop up. And the final thing is a prepayment penalty. We select 3 years for the demo as the most common option for a non-QM investment property. There are options for 0 that will cost more and limit the programs that show up. There are also options for 5 years, which saves our customers some money if they're going to hold the property, but not as many options. 3 years is the most common. That's what we always use here for the demo. All right. Not quite beating conventional today, but this did move down a little bit. It looks like 7.625 rate, 3.375 discount points and cost, 7.771 APR for a DSCR. Conventional was, I believe it was 7.6. So conventional, for the first time in about a week, has beat DSCR. But I'd still say 100% of investors, when comparing this side by side with a conventional loan, will use a DSCR option. No employment, no income docs, much quicker, faster, easier, and it's almost identical cost right now. Actually, yesterday was beating it, and the whole last couple weeks. And there's even some options here at higher rates and costs. So if you scroll down here, there's dozens of options. Still, most investors would take these programs. Some of these may allow things like bankruptcies, foreclosures, other credit issues. Some of these may allow us to use short-term rental income to calculate the DSCR. Lots of flexibility and options here under the DSCR umbrella. So definitely check those out. And I'm sure one of our options for today's topic is going to be DSCR. Let me pull up our topic. So today we're going to be talking about 4-unit properties. So obviously DSCR, very popular option for our investors out there. A lot of investors looking at multi-unit properties. However, I'm sure Jose has some tricks up his sleeve for other options. So if you're ready, Jose, let's check out some house hacker options, hopefully, and also some investor options, hopefully, here, if you're ready. There you go.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. So, definitely love our house hackers here. We always like to point out all the opportunities for our home buyers, our investors, because even our primary home buyers are an investor. They're investing in the property that they're buying. It just happens to be a primary residence. We all talk about building wealth in this country, and one of the ways to build the most wealth is through real estate, right? So we do have some good examples here for our house hackers. Let me just go over to my correct screen, and then I will be ready to share options with you. Give me 1 second. But what I do want to state regarding our house hackers is that you only get one opportunity to buy your first home, right? And when you're a first-time home buyer, and if you're going to do this movement of getting the 4-unit property, then you definitely want to take advantage of doing it on your first time. So let me go ahead and share the options that I have with you.
What do you mean there, Jose? Exactly. You can't start with a 1-unit mansion and then move into a primary home that's a 4-unit property, right? So can you explain that a little bit, just to
absolutely
frame it up?
Yeah, absolutely, because it has to make sense, right? To underwriting, has to make sense that they have to accept what's actually going on, right? That your borrower is going to be purchasing this home. If he currently has a single family home that's 3,000 square feet, and then he's going to buy a 4-unit of for each unit 800 square feet for his family, or even as for himself, it's odd. I mean, I think the only time something like that would be acceptable is if there's a relocation, and and that's what I could afford now at my new spot, whatever it is. But
Yeah.
if you
You'd have to have a hell of a letter there, right? But
yeah.
So what you're saying though is the correct way is to your first home. If you're going to do this move, is 4-unit. Then maybe your second home is 3-unit. Then maybe your third home is 2-unit. Then maybe your fourth home is a 1-unit. You can't go backwards, right? You can't go from already having a nice big house to a 1-unit of a 4-unit property, right? That doesn't make sense. So you want to make sure if this is what your goal is, that's where you start and move up from there, is what you were trying to say, I think, before, right?
Correct. Absolutely. Okay, so let me go ahead and share my options with you today. Got some purchase options for you today. So, first we're going with the obvious ones, right? FHA, 4-unit property, ultimate, one of the ultimate house hacks right here, because you see the great rates. We have lender credits on top of that, right? So you could do 7.25 and get almost $4,300 lender credit to assist with your closing costs. In some markets, that's a good chunk of the closing right there. And you can buy that down all the way to 6.375 at a very good cost there.
And that's still 3.5 down?
Yes, sir. 96.5% LTV. Now, the only thing to consider when you do have a 3 and 4-unit property is the FHA sustainability test. Now, what that means is that 3 or 4-unit property, if all units were rented, right, assuming the borrower isn't going to live there, that they had to move out for whatever reason, if all units were rented, would the property be able to cover the housing expense with the rental income? In other words, if we were talking about DSCR, I guess put it in a phrase that our team would probably understand easier, is the DSCR for that property at least 1.0, right? That service coverage ratio, gross rental income divided by the housing expense has to be at least 1.0, right? That's the FHA sustainability test for 3 and 4-unit properties only, and that's for FHA. So VA offers us a option as well for 100% VA. Wow, look at that. So 7.625 actually with a little bit of a lender credit, and you can buy that down to 6.375%. Now we have our first time home buyer 97% LTV option. Now, obviously, these are all primary homes. And you see, again, I'm highlighting the lender credit rate there, 7.5, right, with $1,606 lender credit. And you can buy that down to 6.5%. Now, I do want to highlight when I'm stating the lowest rate possible. This is the lowest rate possible without any seller paid closing costs, because we're estimating here the cost that would still be compliant with our points and fees test. We don't want to offer rates that are not going to be in compliance. However, I do want to stipulate that if the seller is paying, offering seller credit, right, if that's negotiated in the deal, that seller credit can be applied directly to the loan discount fee, and then that loan discount fee does not get counted in the points and fees test. So it would be possible to for the borrower to get a lower rate if seller is paying for some of that cost. So definitely want to everybody to be aware that 6.5 is not the lowest rate on the rate sheet, just the lowest rate we feel is compliant. So now want to put a little bit additional options there in context. Now I'm putting here an investment property 4-unit conventional purchase. You'll note there that it is 75% LTV and rates 8.125, and you can buy that down to 7.625. And last but not least, we do have our DSCR option. I'm sorry, I left a little typo there, my little 2. Now this is a 75% option. I just wanted to compare it to the option there, and actually it should be like this. So 9% is costing you 0.75 points, and you can buy that down to 8.5%. And I will state that 80% is an option as well on the DSCR, whereas 80% is not an option on the conventional when we're talking about investments. So you do see where our non-QM and our DSCR options are definitely more investor friendly when we are dealing with our exotic properties, right? Little bit of a mind blower here because most people think, hey, how could that be if you're verifying income and taxes and we got automated underwriting? How is it that we can go 80%? It's just the appetite of the secondary market, right? Secondary market loves the DSCR loans, so they are letting it go to a higher LTV than agency because Fannie and Freddie really are trying to foster more primary home ownership. Hence, they added extreme loan level price adjustments to second homes and investment properties, as well as LTV hits.
All right. I don't see any questions in the chat or anything, so I think we can wrap it up. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back here tomorrow. Thank you, everybody, for tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day.
Thank you, folks.
Thanks, everybody.